Hi everyone, this is with the California Institute for Behavioral Health Solutions. Welcome to the first of our Small County Fiscal TA webinar series. We're glad to have Mike back. Just to let you know, if you haven't seen the flyer, we will be having several more of these. The next one will be 17th, and then April 14th, and then May 19th. If you need any information about how to access those webinars and register, just send me an email. And you're all on mute now. We will be pausing on a regular questions. So just if you have questions as we go box, and we'll try to answer them as quickly as possible. Oh, and the last thing is that we're recording this webinar, and it will be, the recording and the materials will be posted on our website within the next couple of days. All right. Mike, are you ready?
Yes. Thank you, Shoshana. Good afternoon. Cover this afternoon is to give you folks kind of an update on mental health revenues, and basically everything is going to that you're going to see here is from the governor's budget that was released, governor's proposed 16-17 budget that was released last month. And as usual, I'll go through each of the revenue streams in more detail. A couple of things. One, so the information that I have here is from the governor's proposed budget. And if you think about when those revenue estimates are developed, it would have probably been last October, November-ish. So prior to a lot of more of the global financial turn that we've seen over the last couple of months, especially in the global equity market, I would view these, and I'll talk about each one individually, but I would view a lot of these estimates as potentially my side, and so I definitely would consider going more conservative than what you're going to see in these. The other thing that there's a lot of, some of you have actually, probably quite a few of you have seen, but what I'd like to do is just hold off on questions till I finish a given revenue source, and then we'll deal with for that specific revenue source. So again, you see the lovely pie chart there. 2/3 of your revenues are driven by the economy, 1/3 by your expenditures, and that kind of continues to be sort of where we are. So starting off with the 91 realignment, again, this refers to the year 1991 when a bunch of services were realigned to the county from the county, formerly funded with state general fund monies, became realigned to the counties, and those were mental health services, social services, and public health services. The state dedicated a specific revenue source for those services, a half cent of the sales tax, the state vehicle license fees, registration fees paid on your vehicles, and not entirely, but a portion of the vehicle license fees, and then $14 million of the state vehicle license fee collections, which is a set amount. So then we're going along. We do this for about 20 years, and then the state ends up in another fiscal situation and wants to push off more responsibilities to the counties, lower the state general fund obligations. So what they did is they took the mental health this 1991 realignment source and used it to fund their CalWORKs maintenance of effort, their state general fund CalWORKs maintenance of effort. And so the revenues that would have gone to you for mental health were used to fund this CalWORKs maintenance of effort. In order to do that, the state took some of the from a new realignment, the 2011 realignment, and the sales tax revenue, and funded the 1991 services for mental health with this other revenue source. And the way the statute is written is that you're guaranteed a minimum amount of funding of roughly $1.12 billion that began in 1213, and you're guaranteed that amount. And then once the amount of funding that goes into the mental health 91 account equals that, then you will start to see growth. And in fact, that happened, as you'll see when we look at some of the numbers. We're into that now, so that you are seeing the 1991 funds. In addition, we receive 5% of the annual growth in the 2011 Realignment Support Services account, kind of a give me for basically the CalWORKs MOE swap. In terms of how you get the money, they're distributed on a monthly basis as funds are collected until you receive an amount equal to the previous year's total. And right now, when there is growth, you receive distributions for mental health, which again is that fixed amount, the $1.12 billion, that you should see the same gross amount every month. And then there's mental health sales tax base and the mental health VLF base, which again, those are growth amounts over and above the fixed amount that you now receive. And then the mental health VLF collections, which is the $14 million. And the one thing with the sales tax base and the VLF base is that the state is going to make sure there are sufficient sales tax and VLF revenues to fund the CalWORKs MOE swap prior to funding your sales tax base and VLF base. So you don't see those revenues until the very, very end of the fiscal year. And in year growth over and above the base, then the amounts are placed into growth accounts where we have separate growth accounts for sales tax and VLF, and there's different distribution formulas. With the sales tax growth, the first priority is to fund any increases in social services caseload costs, and then the rest of the growth goes to the different programs. And with VLF, the growth goes to the 3 programs. And the one thing that you need to remember is, as you put together budgets, is that the growth is distributed in the year after it is collected. So, for example, the 15-16 growth won't be distributed probably until October, November of 2016. So really, you won't see that growth until we're into 16-17. And it does 2 things. One is you get the check for the growth, as well as it then subsequently increases your base for that year in which we're in. Again, assuming that there is continued growth in the sales tax and VLF. So looking at the projections that were in the governor's budget, kind of going through each one of these, you see here the $1.12 billion is just guaranteed. You're going to get that. They fund that actually before they fund other services in the 2011 realignment account. You've got the $14 million, which stays here, and then you've got the mental health sales tax base and the vehicle license fee base, which really the base should equal the prior year base plus the growth in that year, then should give you the base in the next year. It didn't quite work out in 13-14 because there were some adjustments where the state had incorrectly calculated the amount of growth. But going forward, you would expect to see a one-for-one correlation. So in looking at these numbers, a couple of things. One, the governor's budget projects growth. Clearly, they're looking at 15-16 growth here. In 15-16, this represents about a 4% growth, and then in 16-17, this represents about a 3% growth in those two revenue streams. As you may or may not be aware, the current year revenues are pretty flat. So year to date, we haven't seen that level of growth. So again, I'm not sure at this point whether I think it's a little risky to consider that we are going to see that level of growth, given that we're more than halfway through the fiscal year and we haven't seen any growth. So that doesn't mean there couldn't be growth, but I think at this point, conservatively, if I was budgeting for current year and budget year, I'd probably go off of this total base for 15-16 and assume that that's what is going to carry forward into 16-17, absent any other additional information. But again, just looking at where revenues are, that I think is the appropriate way to budget that. Obviously, a chance that we won't even hit the base since revenues are pretty flat. I mean, I think they're actually a little bit down. But I'm hoping that it'll at least continue to where we at least receive the same amount that we saw last year, and so that you can look at that base as a pretty good figure for current year and budget year. So why don't I go ahead and open it up? Are there any questions on the 91 realignment? Okay.
Sorry, there is a question. If we don't receive our, that affect the base? In other words, if they don't distribute the growth, will our base stay flat?
So for each one, for the fixed amount, that will stay flat, and for the vehicle license fee collection, those two numbers, unless we just go into a catastrophic recession, you should always get those, and so those will always stay the same. But what will happen is if this base number of 1.217 isn't met, because the mental health sales tax base and the vehicle license fee base aren't met, then yes, your next year base will be the lower amount. So say, for example, this comes in at $30 million and this comes in at $30 million. So we're off by about $20 million. That would then be your base going into the next year. And so it does reduce your base in those two accounts or those two revenue sources. But the main source, the CalWORKS MOE swap, does not change, nor does the $14 million change.
And there's another question. Can you please repeat how the mental health sales tax base are calculated?
So their sales tax revenues come in to the state, and they put them into the 1991 account, and a certain portion of that goes to mental health. That is then swapped for this, is basically used to fund this CalWORKS MOE. When the amount between both the sales tax and vehicle license fees exceed this 1.12 billion, that's when we have growth in the mental health sales tax base and the vehicle license fee base. And it's proportionate to the growth formulas that go back in history in 1991 realignment. But again, remember, when there's sales tax growth, social services caseload costs are funded first prior to funding the general growth, which is where the mental health share comes from. But there's, and I'm not sure the percentages off the top of my head, is what the sales tax base and the vehicle license fee base, that's where they come from. After the amount of money put into the 1991 account for mental health exceeds this 1.12 billion, that's where the growth then comes in. and like I said, the 15, 16, these, for us to hit, so right now, assuming that we receive the same amount of revenue as 14, 15 in sales tax and vehicle license fees, you'll receive this $1.2 billion, and you'll hit your sales tax base and the vehicle license fee base. What I think is questionable is whether there'll be any growth in those amounts over and above what came in last year. And so I don't know if I would increase those up to that level versus just holding flat at this $1.2 billion amount. All right.
No more questions yet.
Moving on to the 2011 realignment. So I kind of touched on it already. There were issues, again, where the state couldn't meet their obligations in the state general fund, so they shifted more services to counties. And initially, they dedicated a specific portion of the existing sales tax to fund those realigned services, and that was a little over 1% of the sales tax. For behavioral health, there's a behavioral health subaccount, it included everything that was previously funded with state general fund monies, which includes early and periodic screening, diagnosis, and treatment services, Medi-Cal, especially mental health managed care, and all the substance use disorder services that were funded with state general fund monies. So those were realigned into this one sub-account called the behavioral health sub-account. As a side note, in 11-12, because there weren't sufficient revenues from the sales tax to fund all these services, in 11-12 the state took MHSA funds and redirected those to fund the realigned mental health services. In terms of how the individual county percentages are figured out, there were some changes in 15-16. And so what the state has done is so the original amounts were based on what you were, for substance use disorder, what you were spending on those services. Your managed care part was figured out based on what your managed care allocation was, and EPSDT was based on your estimated certified public expenditures for EPSDT services. In 15-16, they modified that a little bit and gave all counties a minimum of at least $100,000 in the calculation for drug Medi-Cal services. And I just looked again, and the 15-16 percentages have not been adjusted to reflect the distribution of the 13-14 growth. So this one's a little different. So 1991 realignment, you can pretty much count on, as long as revenues stay at least equal to what they were in the prior year, you're going to continue to receive the same amount of money. This one, the state is modifying the individual county percentages, in this case based on the $100,000 minimum for drug Medi-Cal services, and at some point I would imagine they will modify them for the distribution of growth funds. So it makes it much more difficult. So in addition to having to try to figure out what the base is going to be, you have to figure out whether your percentage is going to change or not, which is impacted by what other counties do. So talking about the 13-14 behavioral health subaccount growth and how it was distributed, the state is really concerned that they continue to fund the two entitlement programs, which they consider the EPSDT and the drug Medi-Cal, at amounts that they would have funded prior to the realignment, because they don't want to subject themselves to any sort of state general fund exposure. The balance of the 13-14 growth was distributed based on the percentage of average monthly Medi-Cal enrollment in each county. And so every county did receive at least some growth. The one thing with this is that the 13-14 growth, which would have been known in October, November of 2014, wasn't distributed, I don't think, until October of 2015. So it makes it a little bit frustrating from a cash flow perspective, in that it takes a while to get that growth distributed. And is because of that first bullet, where the state wants to, keep these programs whole. They need the data, and so, given the claims data and lags, it takes a while for them to do that and to calculate what would have been paid otherwise. So, in any case, at this point, I haven't heard anything different, so I would anticipate a similar approach for the 14-15 growth. I said it's hopefully going to be out by this June. That's probably overly optimistic, but hopefully, because the state, I believe, needs to convene a work group. I'm not sure if that has even been scheduled yet, but hopefully, if not by June, it'll be shortly thereafter that you'll see the growth for 14-15. So in terms of the actual numbers, again, you can see them here. So like I was saying, so the part that is similar to 91 realignment is you take the base for a given year plus the growth. That then becomes the base for the next year. It's a little different here, and I wasn't totally sure why. I think there might be some rounding that was going on, but in any case, it should always be the total amount, base plus growth, should equal the base of the next year. The amounts of growth, for example, for 14-15, this is a known amount, the 117 million. That's what we're talking about potentially being distributed this summer. So that your base in the current year is $1.16 billion. So that is the base. And then you've got some projections from the state that the new growth is going to be 120 million in the current year and then 128 million in the budget year. So a couple of things. This is predicated on almost 6% growth in the sales tax, which, given that, again, year-to-date revenues are flat, I think the 119 million is probably overstated. The second thing is, like I said, the state goes through this process to figure out how to distribute the growth. So even though your base may go up, how that 119 million is going to get distributed may not be known until we're out into 17-18. And like I said, it may not even be the 119 million dollars. It I think in all likelihood will be a little bit less than that. So again, from a budget perspective, I think the base that we have for this year, and given that the state hasn't yet modified the allocation percentages, I think you can look at that base and pretty much anticipate receiving that amount for 15-16, and I would probably just carry that again into 16-17. I don't think I'd be counting on the growth at this time. And then you can somewhat count on this 117 million being distributed sometime in late 15-16, early 16-17. But the problem there is you'll have no idea what your share of that 117 million is, because it's predicated on what everybody else does, all the other counties. And until that data is published and shared with folks, there's no way to know. So I don't even know how I would budget for that at this point. So let me open that up for questions.
There are two questions. One is, do you remember how much MHSA was diverted?
Yeah, so overall, so it was for three things. It was for both EPSDT, and actually you can add up here, it was EPSDT, actually these amounts aren't, this is 1213. So it was EPSDT and the Medi-Cal, especially mental health managed care, but then it also included educationally related mental health services, which we refer to as AB 3632. Overall, $161 million that was redirected from MHSA to cover those services in 11-12.
When we receive growth for behavioral health sub, will that increase our base in the current environment?
So, and again, this one, it should, but so this is different. So where in the 91 account, the way I look at it, in the 91 account, when there's growth to a county, that growth then plus your base becomes your base for the next year on an individual county basis. So you know what you're going to basically receive, assuming revenues don't decline. With the behavioral health sub-account, because the state modifies the distribution percentages at a wide level, yes, the base, the new base equals the prior year base plus the overall statewide growth. But on an individual county basis, because the state's modifying these percentages, you may or may not receive the same amount as you received in the prior year. So they're a little different. One, the 91, I think you can count on it at a local level, but the 2011, it's more at the state level, the base is known, or the new base is known. How that gets distributed is what makes it more difficult for you folks to budget it. And so you can't count on an increase in the amount of growth that you individually receive increasing your base. And again, a good example of that was the 14-15 growth. The state put out the 14-15, but made no adjustment to each individual county's base. All right.
All right, another question. The governor also included additional SGF funding in the budget to cover the expansion of drug Medi-Cal services. Were you going to speak to that?
Not today. I mean, we're just going to focus on mental health. And I do believe that DHCS did put out an information notice showing how that's being distributed. But you know, we can cover that. I think we'll at some point, because I'm sure you guys have tons of questions on the drug Medi-Cal waiver and all that sort of stuff. We'll probably focus another webinar on substance use disorder stuff.
One last question. Are the 16-17 numbers on slide 0 from the state budget document or from where?
The 16-17 numbers for the 2011 realignment here on slide 9. Yeah, those are directly from the state budget.
Yeah, slide 9.
What's that?
Yes, it was slide 9.
Yeah, no, and yes, those directly came from. There's a chart. If you go into the detailed budget and look at you know, the Health and Human Services or whatever they call it, you'll see the 2011 realignment, and you'll see a chart that shows all the different programs, not just the behavioral health sub-account, and that's where these figures came from. All right, moving on to MHSA. So hopefully you're aware, you know, the MHSA is a tax on the millionaires. Very few folks pay it, and in order to provide cash flow to the fund at the state level, there's really two sources of deposits. There's 1.76% of all monthly personal income tax payments, and then there's a settling up of what's actually earned by the tax through tax returns compared to these monthly cash transfers, and that's called the annual adjustment. There also are, and it lags by a couple years, there also are some other revenues. There's a little bit of interest income, and then there are excess state administration, because 5%, up to 5% may be set aside for state administration. The state doesn't always use that, as well as they don't always spend that. And then there are reverted funds from the local level. So cash transfers are largest in months with quarterly tax payments. So in January, April, June, and September, um, the state receives quarterly tax payments, and so there's an influx of additional personal income tax payments, therefore making your distributions a lot higher, or the amount of money brought into the fund a lot higher. And the annual adjustments are incredibly volatile. Again, you have very few folks paying this, so it's somewhat dependent on human behavior, and so it makes it very, very difficult to project. They lag by 2 years, and if you think about it, you file your tax return in April for the prior year, but you have until October to file an extension and then subsequently submit your tax return. Department of Finance and Franchise Tax Board then take a couple of months to calculate it. And usually, I mean, I think it's required to be known by March 15th. Usually it's known earlier. So I would anticipate we'll know the annual adjustment coming up here in the next week or two. And that amount is then deposited on July 1st. In terms of how the county funding works, and actually I've got about 10 slides here that really are kind of just to refresh some of your memories on some of the requirements around MHSA, and I'm going to go through them pretty quick. And you know, if there are questions, we could go back to them either today or at a later date. But anyway, the funds are distributed to you folks on a monthly basis in accordance with statute, and it's the amount of money brought in less what is basically reserved by the state for administration, and then you receive that by the 15th of the next month. Right now you're getting one check from the state for MHSA, and you're required for ensuring that you spend 20% on PEI programs, that the balance goes to community services and supports, but then overall that 5% of your total funding shall be utilized for innovative programs, and that you're also required to have a local mental health services fund in which you earn interest, and that interest remains in the fund to be used on MHSA expenditures. Beginning in fiscal year 8-9, you can dedicate up to 20% of your average 5-year total of all your MHSA distributions, or how much you received, to 3 different parts, either prudent, and you can do it to 1 or 2 or 3 or all of them, but it's capped in a given year how much you can dedicate, and that's to the Prudent Reserve, capital facilities, technological needs, or the workforce education and training programs and projects. And then also the statute allows for that you may use up to 5% of your revenues for planning, because again, the MHSA really is intended to be a local stakeholder-driven process, and to meet the needs of your local community. So one thing, given all that, where prior to AB 100, you used to get a published component estimate or planning estimate, but because of the way the funding now works, your amount of funding is not guaranteed, so that's why we do these revenue estimates. Obviously, it provides more risk to you folks, but at the same time, it took you out of having to basically almost submit an application for the funding. It isn't, you know, again, because of the estimated estimated tax payments being the larger months, cash flow is going to vary. It doesn't just flow nicely each month. And in fact, a lot of the cash transfers occur in the last 3 months of the fiscal year. And ultimately, you want to use the tools that are provided in the MHSA to manage your funding, specifically the local Prudent Reserve, and again, and then the 3-year reversion period for the different component funding. So let me, we're still doing this. So in talking about expenditures, you're required to prepare a 3-year program and expenditure plan and updates to that plan. And in there, you provide the estimate by each component. and then your expenditures by component. You go through the stakeholder process. And one of the keys that I always reinforce to folks is that all your MHSA expenditures must be in accordance with your approved plan. And so if you're ever thinking of doing something, make sure it is consistent with what is in your plan that went through the stakeholder process. And then finally, you're required to prepare and submit annual revenue and expenditure reports. I know the format has often been in question over those, as well as some of the timing on that. Originally, it was intended, well, and it still is, I think, per the statute, is primarily to provide information for evaluation on different aspects of the MHSA. So going into a little bit more detail on the Prudent Reserve, there's really 3 sections of statute that talk about the Prudent Reserve. One talks about that you're required to establish to have a Prudent Reserve so that you can continue services in years in which revenues are down. Second, it says you can use your Prudent Reserve in years in which there's not enough funding to provide services to the same number of people. And then lastly, which I talked about a little bit before, you're limited to this 20% transfer or shift, which talks about the Prudent Reserve being used to mitigate the reduction of services. So it's got 3 different three different sort of approaches to the Prudent Reserve. I think one of the main things is initially the state talked about, and they had info notices that they subsequently rescinded, saying that you were required to establish and maintain a 50% Prudent Reserve. That is no longer the requirement. And what is the requirement is that you cannot put more than 20% of the average amount of funds allocated to your county for the previous 5 years into the Prudent Reserve in any one year. Real quickly on reversion, the statute again provides a specific time frame for when the funds must be spent. The majority of funds must be spent within the 3 years. The 2 more support type components of workforce education and training and the capital facilities technological needs, you have 10 years to spend those. And really the reversion period starts when you put funds, once you receive the funds. So you've got the year in which you receive it, plus 2 more years, for example, with CSS, PEI, and innovation to spend those funds. And to date, we're still waiting on regulations on all of this. So we'll see how the state ultimately interprets some of this. So in terms of how to project the revenues, which, like I said, is very difficult given the volatility of the annual adjustment, basically, there's a couple of sources. So the state provides the estimates for MHSA as part of the governor's January budget and the May revise. The one thing you need to know is that those are estimated accrued revenues. So it includes the cash transfer for the budget year, for example, but then it also includes the annual adjustment that will be earned in that year, but really won't occur for another 2 years. So when you see numbers in the governor's budget in the May revise, know that those are accrued revenues and are not going to represent what you will receive or may receive in a given fiscal year on a cash basis. The Oversight and Accountability Financial Oversight Committee prepares a financial report that also goes through a bunch of the revenues. It takes the accrued revenues and puts them into a cash basis. So I believe it's Appendix 1 in their report that shows the amount of anticipated revenues to the fund on a cash basis. And then, it's always recognizing that the governor's budget is prepared by the Department of Finance, which is part of the administration. It's always good to look at other sources, such as the Legislative Analyst Office that reports to the legislature, and see if they agree or don't agree with some of the revenue projections to try to balance that out. And then on a monthly basis, you can see the status of the projections versus, excuse me, the actuals versus the projection. There's a monthly finance bulletin that goes out that the Department of Finance puts out that shares the actual versus estimated transfers into the State Mental Health Services Fund. And one thing I didn't put on here is that CBHDA on the Financial Services Committee website is now, or at least has posted several of the reconciliation letters that are put out monthly by the Department of Finance. And those actually are probably the most helpful if you really want to get into the nitty-gritty of how the total statewide amount was determined and then your specific amount. But it shows the amount of revenues brought in, the amount reserved for various activities, both at the state level and some of the local stuff, and then shows how that then results in how much was distributed. And so as hopefully CBHA continues to post those, you'll build up over time. You can kind of track where the state is or where the revenues are in a given point of time relative to prior years. And if you want, we can go through that letter in more detail in a subsequent webinar. So again, trying to balance out what the state's saying. You know, there are a couple other sources that are worth looking at just to kind of see where folks are anticipating the economy. But again, it's really hard to estimate this annual adjustment. You know, very often, as in the last 2 years, the state's estimate in January was off by more than 50% once the actual amount was known in March. The other thing to take into account is there often are changes in fiscal policy or fiscal tax policy that don't impact MHSA directly, but impact the timing of the revenues. For example, the Proposition 30 created a higher tax on higher income individuals. So as a result, the amount of personal income tax payments coming into the state increased. So that 1.76% went up quite a bit. Well, as a result, you received a lot more money sooner. And then we saw this last annual adjustment that posted last July was a lot lower because a lot of money had already been given to you in the form of the cash transfers. So you need to kind of look at what's going on with various tax policies as well. And then politics obviously plays into this thing too. Obviously what's been discussed quite a bit are that there are large amounts of unspent funds in some counties. There are different groups that want access to these funds. Like I said before, there's no regulations prescribing the reversion process. Probably the biggest thing is whether the state's going to look at the net MHSA expenditures or the gross MHSA expenditures, recognizing that in order to receive certain revenues, you often have to incur a full expenditure. And so I think that will have a significant impact on how much may be reverted or not reverted. The state has begun audits, but yet there's no audit and appeal process regulation. So not sure how that's going to actually play out. The only two fiscal consequences in the act itself are reversion. So if you didn't spend the money within the amount of time, it reverts. And plan of correction, there are no other fiscal consequences in the MHSA. And then lastly, you know, the state, and they did this in 15-16, they're modifying the percentages based on more recent data. Unfortunately, that the recommendation from the Behavioral Health Directors Association was only to adjust growth and not the overall percentage, but the state went ahead and adjusted the overall percentage. So finally, talking about some future revenues, and really part of this, so the Department of Finance put out a couple of estimates. One, they provided some estimates to the California Council of Community Mental Health Agencies in October, and you can see those there. And then they published the governor's budget, and they were pretty significantly different. And it just shows you in a couple of months, depending on what's going on in the economy, these revenues can shift quite a bit. And I think, especially if you look at 15-16, the governor's budget's 12% higher than what they had estimated back in October, and 10% higher in 16-17. But also recognize that both these amounts all these amounts are accrued amounts and are not cash amounts. So this isn't the cash that's going to go into the fund in a given fiscal year. So let's look at some numbers. So again, what we have here, the annual adjustment for the current year, this $94.3 million, that's already been posted to the fund, so that is known. The only thing that is left to see if it materializes in the current fiscal year is cash transfer amount. I will say that year to date, unlike sales tax, personal income tax is up quite a bit. It's up about 8%. So it looks like this may actually materialize. However, the one caveat is that April is the biggest month, and we haven't seen April. So we'll know. We'll have a really good sense after the receipts in April whether we're going to hit that amount or not. For 16-17, the annual adjustment, like I said, this letter week or two, so we'll know that amount. Again, that will be a pretty strong driving force in terms of whether, and I wouldn't say whether we increase, because I think it will go up, but it'll determine probably the amount that actually goes up. I do think that it will be higher than the 94.3. Whether it's as much as 84 or 484, I'm not sure. This goes back to the 2014 year. So we started coming out of some of the, we were seeing growth at that point. But whether it ends up being that high or not is yet to be seen. But I do think it'll be more than the 94.3 million. Then, the cash transfers are assuming continued growth in the economy, as well as these annual adjustments. Whether again that happens, is obviously going to be contingent upon not just what goes on in California, but what goes on globally, because a lot of these funds are earned through, equities and various other investments. So, but what do these revenue estimates mean for you folks? This then takes the revenue estimates and puts them into the estimated component funding. And again, you see a huge, well, first of all, you see a huge decrease in the current year, which is driven by that 94 million annual adjustment versus 400 plus million in the prior year. But then you see it bump back up in 16-17 for exactly the same reason, that the anticipation is that there'll be a large annual adjustment in 16-17. I do think, I think it's a pretty highly likely that 16-17 will be higher than 15-16. Whether it goes up that much or is more around the level of the 14-15, maybe a little bit above the 14-15, I think that still remains to be seen. And like I said, once we get the annual adjustment letter, we'll have a good sense of that. And then 17-18 and 18-19, again, it projects expansion in the economy, and we'll kind of have to wait and see what happens there. going to see how this thing looks graphically. And then just to, in terms of these estimates and the future funding, and some things to consider is that even though Proposition 30 doesn't directly impact the MHSA, it does impact the timing, like I said earlier. So it is set to expire in 2018, the increased personal income tax rates from Prop 30. If Prop 30 is not extended or made permanent, then what you'll see is a decrease, not necessarily a decrease, but you'll see a slowing of the cash transfers because this higher income tax won't be there. And then you'll subsequently see 2 years later a higher annual adjustment. There have been some proposals to redirect MHSA for statewide activities. The Steinberg Institute is proposing $130 million per year servicing for some housing bonds. That probably would not impact any of the distributions for at least 2 or 3 years by the time they actually get that going and issue the bonds and have to start servicing the bonds. It'll probably be a couple years, but it potentially could impact the future. And then, CalMesa is looking for ongoing funding as some of the statewide projects are set to expire, and so they're also looking for ongoing funding. And again, long-term economic forecasts, the state is projecting all this, assuming growth, and I think as we've seen for the first 2 months of this calendar year that that isn't necessarily the case, and there are those that believe we may be going into another recession. And finally, just give you a little bit of advice on the expenditure side. The combination of your prudent reserve and your unspent funds, doing the financial modeling on when we had a decrease in revenues, you want those to equal about 1 year of expenditures. And if you have 1 year of expenditures in a combination of prudent reserve and unspent funds, then you would be able to withstand an economic downturn like we've seen in prior years. Also recognizing the prudent reserve is less flexible than the unspent funds, meaning that you have to go through the plan, you have to go through an update to your plan to put money in and take money out. But at the same time, the prudent reserve is more protected than unspent funds. And then also don't forget that as some of the initial distributions for the workforce education and training and capital facilities technological needs, as that funding expires, as you spend it, you're going to now have to, if you want to continue those initiatives, start to use some of your CSS and repurpose it for those two components. So that will start to take a chunk out of your MHSA CSS funding. So why don't I go ahead, and I know that's quite a bit, but let's go ahead and open it up for questions.
There are a lot of questions. I don't know if we have enough time to go through them all.
Yeah, since we only have 5 minutes, because I could go back through this, in a different webinar, in a future webinar.
We can. I can send you all of the questions, and if you wouldn't mind responding to them in writing, I can send them all. Send all the answers out.
Okay.
Okay.
Yeah, I was wondering if this was going to take too long, and so I apologize. So the last big revenue source is your federal financial participation, or your Medi-Cal, especially mental health reimbursement. And here, as the county mental health plan, you're reimbursed a percentage of your actual certified public expenditures based on what's called the FMAP. And the FMAP varies, it actually varies by state, but also even within a state. In California, it's 50%, although it has changed over the years. But for some individuals who qualify under the Affordable Care Act or the Enhanced Children's, the reimbursement is either 100% or 65%. So it does vary basically by how the client qualifies for the Medi-Cal entitlement program. And so you're reimbursed an interim rate throughout based on you submitting a claim to the state and that getting approved. And then also your interim billing rates, which for contract providers, so the CBOs that you contract with, should represent the amount that you're paying the CBO, and then for county operated providers should approximate your actual costs. And the state has actually, the county, I think it's county interim rate table that they calculate based on your most recently submitted cost report, the maximum interim rates that they're willing to pay for county operated providers. The interim amounts are then reconciled to the actual expenditures through the year-end cost settlement process. Generally, submit 6 months following the close of the fiscal year, and then another, 18 months later, 12 to 18 months later, you submit a settlement, a final settled cost report. The state has been late on this, and so I believe they're only settling 11/12 at this point. But in general, that's how the process is supposed to work. It's supposed to be more timely. And then finally, DHCS has 3 years from the submission of your most recently filed cost report to audit the cost report and determine the final Medi-Cal entitlement. So we're hoping that this changes, but currently this is the process that you folks get to go through. And so just kind of putting all, and again, just in the interest of time because we're running out, putting all the major revenue sources together, you can see kind of the trends here. Again, I would look at especially the 2 realignments in 15-16 and 16-17 is potentially a little bit high. MHSA maybe in 16-17 might be a little bit high. The other thing you need to know on the 2 realignments, I'm showing growth in the year in which it's earned, not necessarily when it's distributed and available to you. So keep that in mind if sharing this with others. The FFP, we saw a huge increase in 14-15 because of the ACA. And then we're seeing some slight increases. The one thing you need to know there is that the state has included the supplemental payment state plan amendment in 15-16 and 16-17. Hopefully that materializes and there aren't issues with the lower of cost or charges and you're able to get that that reimbursement. But overall, I mean, 14-15 was obviously a good year, and then we're kind of, this year's a little flat because of the decrease in MHSA. I would think 16-17, it will be better than 15-16, whether it's, that much more, I think has to be seen, and we have to kind of see over the course of this next calendar year just kind of where, again, the economy goes. So I think we're out of time, but we will do another call that primarily on services committee meeting that's next week. But I will look at the questions and try to get back to folks individually. As we may just take, especially that I hear from more than one person, and try to put those into the webinar for next month. That is it.
Thanks, Mike. We'll be working on the questions and out the answers as soon as I'll also link to the when we have it available. One is on March 17th. Thanks.
Great. Thanks.
Bye.